Vinit, hi. Thank you so much for making time and speaking with us. Well, what's standing out to you in terms of earnings? We, of course, got M&M, SBI, and a lot of other names as well recently. Anything that caught your attention?
So I think Zomato was a very strong number for us, and it firmly dispels all the naysayers away. And we believe that this stock can now really, really move up. So there is the path to profitability which has been established. Blinkit has been absorbed well, costs have been curtailed, rationalized. And we think that, from here over the next couple of years, 50% growth on top line and sharp growth in bottom line is what we are forecasting going ahead.
Okay. What is the right way of looking at the right P multiple or the valuation for Zomato? I mean, what do you think is the deserving market cap? Because now it's almost 90,000 crore, north of about $10 billion. That's not cheap by any yardstick.
Yeah, so what we've done is we built out a DCF model, and as far as our numbers are concerned, we believe that a price of 140 in the next couple of years is what we are gunning for, or we are looking at a 50% upside from current levels.
The other thing, Vinit, which is happening in the market is entire this manufacturing vertical, and the fact that the government has now put import restrictions on laptops, tablets, etc. That's giving a bit of a pull up to the likes of Dixon, Amber, and the other manufacturing names, right from Kane, Serma, SGS, etc. Do you see more upside on these names, or they're getting a bit more toppish given the valuations?
I think the growth story is intact, but the valuations are a little demanding, little discounting. I would be a buyer on these stocks definitely, but at slightly lower levels or on 5 to 10% dips on these stocks.
Vinit, which is the other big consumer fintech which could go the Zomato way now? Because now there is a subtle not a subtle realization, but a sudden realization by market participants that these companies are here, they have a viable business model, and they are speaking the language of capital markets, not a private equity club.
So I think Paytm is the way to go. We are very, very bullish on Paytm. I had spotted this change in trend about a year ago, but the stock came down by half from the time we spotted it. But now it's back to the 800 levels, and I think this stock can rally very aggressively from here. And our target, my personal internal target on this stock is around 13 to 1400 rupees per share. Again, same, we are using the discounted cash flow method to value these stocks, and that's what we are looking at over the next couple of years.
Why has Mahindra Group picked up stake in RBL, and they're saying we don't know, but we're investing because we want to understand the financial sector and the risk and all the other factors associated with running a bank? I mean, by acquiring 3% stake, 400 crores of non-core investment, Vinit, what are they trying to do?
See, RBL is a very, very strong franchise. It has been turned around. And, my guess is that I think they are bailing out of Kotak Bank and taking money into this bank. That is my guess. Because, the Anand Mahindra was categorized as non-promoter in Kotak. And I think now they're putting money into this venture because you're getting a very well run and a very good franchise at very, very cheap valuations. So I guess they're doing that. And possibly the story going ahead would be that they would want to merge M&M Financial with RBL. That's my guess. If there is no statement from anyone. But that would be the logical way to go, given the fact that you don't have 2 or 3 finance arms in the same company.
So I'm just trying to put 2 and 2 together here. Okay, let's assume that they eventually use RBL, increase their stake, and then merge Mahindra Finance into it, because they've been wanting to take Mahindra Finance to a level of a bank. So then, is Mahindra Finance a stock to buy? Is RBL a stock to buy? Or is Mahindra and Mahindra a stock to buy? Or none of them are a stock to buy?
No. RBL is definitely a stock to buy. So irrespective of Mahindra putting money into this stock, we had buy on this stock at 130. with a target of 260. Today we are sitting around 210, 220 odd levels. Still a way to go. And our estimates were very, very conservative. When we had spoken to the bank, they were very aggressive on our numbers, and they were of the opinion that we are being quite conservative. So we believe that now with Mahindra coming in, corporate governance is strengthened, and I believe that there could be a re-rating of the multiple of RBL Bank.
Nothing wrong with SBI numbers, at least prima facie, little bit of cyclicality in NIMs, but brokerages, at least the global ones, have come out with knives and saying, okay, it's a miss, it's a miss, it's a miss. Do you think there is too much of scrutiny in one quarter here or there?
So I think the slippages were a little disconcerting. Slippages came more than we expected, but overall, I think the performance was very good. Provisioning is also slightly down. With the help of which they managed to grow the profit. So there could be a little bit of question mark going there in the eyes of these foreign brokers. But to my mind, I think at one time book, such a large franchise with very, very strong, subsidiaries doing so well, all compounding at 15 to 20%. I think this bank deserves to get re-rated, and very, very sharply.
Edge is the real outperformer. Policybazaar, big investor. Zomato, big investor. And when I say big investor, I mean they are the largest shareholder. I should just check it out. No, I mean, I think they are the largest shareholder of Zomato.
Yeah, they should be, because I think they hold 30% plus stake, if I remember it right. Was it Info Edge? Was it? Just give me 1 minute. I'll check that for you.
Even Policybazaar.
Because of course, I think with Zomato, the promoter or so-called, the Dipinder's holding is very, very low. So the other names that stand in terms of investment should be Dipinder Goyal is just 4.3%. Info Edge holds 13.93% stake.
They're the largest investor. They're the largest investor. Then you got, of course, Ant would be there. So apart from Ant, I think it would be right up. The Info Edge is actually higher than Ant. I just realized. And I think Policybazaar a similar number. Okay, Vinit, is it a good idea to simply buy Info Edge? You get an interplay into Zomato, you get an interplay into Policybazaar, you get an interplay into a tech recovery.
Absolutely. Absolutely. I second that. Thoroughly appreciate that idea.
Better than buying Zomato and Info Edge, just buy, better than buying Zomato and Policybazaar, buy Info Edge. I'm getting just jumbled up with all these new age tech names.
Yeah, but I am very, very gung ho on Zomato, because I believe that everything is ticking along quite nicely. Costs are in control. Top line growth, we are expecting 50% growth over the next 2 to 3 years. Bottom line coming out of the it will have a lot of tax shelters. So, I think there is a case to be made for a very strong up move. 140, 145 is my target on that stock. So I'm thinking of 50% upside. I don't think you'll get Info Edge with 50% upside.
Earnings impact on your screen, Edelweiss Financials, 45 rupees. Earnings impact on your screen, Mahindra and Mahindra not going anywhere. Earnings impact on your screen, TCI Express, which has been a phenomenal wealth creator. Actually, Nisha, we're discussing Raymonds and Escorts. Let's look at TCI Express. It's a spin-off from TCI. And if our producer could look at, let's say, the 5-year or even a 7-year, I don't think the spin-off is more than 5-7 years. But if you just look at the squeeze in 5 years, and what do we have on TCI Express? It's again been one of those, ranked outperformers, almost a 3.5x stock. So Vinit, we were discussing how Raymonds has been a multi-bagger in last 5 years, how Escorts has been a breathtaking mover in last 10 years. Which is the next big one now?
I think Escorts has got a lot of steam left. I think it's going to move up very, very sharply.
It cannot give you the same percentage return. So in that same percentage returns, like high return probability basket or a possibility basket 5 years out, this could be a trend in making, and this could be a stock if they deliver, and if the tailwind continues, the business could head out of the park, or the stock could head out of the park. What falls in that criteria for you?
I think Welspun India is one stock which is out of the radar for everybody. And I think that stock has the potential to do exceedingly well over the next 5 years. My reasoning being that the home textile business has got back its margins again. If you see their B2C business is clocking along quite nicely. Towels, bed linen, uh, as well as their wooden flooring business is coming along very well. Their capex cycle is over. We are going to expect margins going to between 10 to 15%, EBITDA from zero as of now. And the way their B2C platform is building up uh, in the consumer discretionary space, I think there could be a very, very sharp re-rating on this stock. Not to forget, uh, uh, that they would also be debt-free by then.
From the QSR space, Jubilant Food or even Devyani and Sapphire for that matter, do you like any of the names?
Devyani by a wide margin, given the corporate governance, the way Varun Beverages is run, we believe that the same thing can rub off on Devyani. And to my mind, this stock is uh, got a 30 to 40% upside for fair value.
So which is the best play on QSR then? Is it Westlife, Burger, Sapphire, Devyani, Zomato, or Simple?
I go with Devyani because you've got a diversified franchise base. You've got different brands. It's run very well. It's an efficient machine, and they've got a very, very good run rate of putting out new stores. So I'll go with Devyani.
4 minutes to go, and then the earnings impact on CAMS. It's just been a stock when it went public, nobody bothered, and the number of demat accounts are getting added just on a regular basis. It is so amazing to see that. I want to look at some brokerage stocks here and some AMC stocks here. I mean, we are talking about bull market, SIPs, brokerage, demat accounts, but regulatory, so much is changing in that space that HDFC AMC, frankly, nowhere close to its 52-week high. UTI AMC, nowhere close to its 52-week high. All that buzz of them selling the stake and sponsors selling the stake, nothing's gone through. We did a story that the Birla Group and the Tata Group were interested in bidding for it, and I don't know what happened after that. That deal has just, I think, fallen on the wayside. Aditya Birla Financials, Aditya Birla AMC, nowhere close to its public listed price when it went public. I think it was 600 plus, and Reliance Nippon again done nothing. Similarly, in that same vein, Motilal Oswal Securities, you look at Angel, the brokerage stocks typically, I don't think they are the ones where a lot of wealth has got created. And Vinit, this is like the biggest irony, right? SIPs are strong, brokerage is strong, demat is strong, but
SEBI is also strong. So SEBI has come in and spoiled the party for all these franchises. They've tightened the noose, taken de-risking measures, which are very, very tight, enhance working capital, cut back on trails. And, I think they're hurting because of that. But I think I think I would give it 6-8 months before the poison in the stock settles, and then they would resume their upward journey.
1 minute left for the closing, sir. Sharp answer on the Cipla Blackstone deal which is brewing. Do you think there is some reality to that?
I wouldn't want to wager on speculation.